afternoon. Thanks for joining us today. We have an update presentation with Gold Terra. Before we get into that, as always, this presentation will contain forward-looking statements, so you can check those out on the company's disclosures on their website. And there will be a Q&A section at the end, so feel free to input your questions in the Q&A box at the bottom. With that out of the way, I'd like to welcome Dave Suda, who's an advisor to the company, and Gerald Panneton, who's Chairman and CEO of Gold Terra. Gold Terra trades on the venture under the ticker YGT. And they actually had some fantastic drill results out this week, so I'm sure we'll be talking about those as well as some corporate changes that are happening. Welcome, gentlemen.
Thank you very much, Deb.
Nice to see you again.
Always a pleasure. Always a pleasure to have an opportunity to talk to the investing community and update them about our story and our company. And, maybe we can basically just go with the biggest news before the end of the year, which was David wanted to move on. Maybe you want to say something, David, and then I'll carry on.
Thank you, Gerald. Thanks, Deb, for having us. And Gerald, congrats on the new position. There's nobody I would want to be in that slot more than you. And I think, the shareholders of Gold Terra, in particular myself, were thrilled that you're at the helm. I think this is, a time on the trajectory for Gold Terra that's perfect for Gerald to take this on with his experience in building mines and companies. This is a great time for shareholders to have the opportunity to have him at the helm. And for me, I feel that I've accomplished a great deal over the last 3 years. Very proud of our achievements as a team. I've found an opportunity to pursue, which will be public very soon. But I'm going to stay involved in making sure that the time spent and the money invested in Gold Terra is as well shepherded as possible. I love the project. I love the shareholders and everybody involved. So I'm a very happy participant in this, again, on this new trajectory. So thanks for the opportunity and look forward to working with everyone in the future.
Thank you, David. As you know, the biggest achievement for David was to bring me to the story 2 years ago. So thank you, David. And here we go. I think within the last couple of years, you saw a lot of change in Gold Terra under the leadership of David and myself. And I think sometimes things moves on. To be honest with you, 2021 was a big cornerstone. Beside the fact that David was leaving, we signed an important deal in November. I don't want to go too much over it, but I can tell you this allowed us to explore 100% of 3 kilometers of strike length south of the Con mine, an area that the first deal with Newmont could not help us do. But at the end of the day, Newmont sat down at the table with us. I think we had a webinar immediately after the purchase option was signed, and we go. Now we have it in front of us, ready to go, and I'd like to entertain you with what Gold Terra intends to do in 2022 and years to come. But first, as you know, public company has some forward-looking statement. They are on our website if you want to read them, as well as cautionary statement. Everything today is on the public domain. And of course, our snapshot, basically, we are a company that is involved in Yellowknife, infrastructure supported, city, people, mining skills, mining equipment, whatever you want to call it. This is a great place to be working. Everybody goes home at night. And beside going too much into this, I'd like just to move on to the most important thing, which is the Newmont purchase option. This is a cornerstone. This is a game changer. This is what will bring the company to a level that will create so much more value for the shareholders. And the main point is being able to explore the Campbell shear south of the Con mine at 100% of our freedom, basically. Being able to tap into what has generated so many ounces in the past. Our current valuation at roughly $32 an ounce is very low. You want to compare our project and our deal with Newmont on the Con mine, there is a comparable. Skeena Barrick, SK Creek Mine, British Columbia. Skeena, 4.5 years ago, was a company in the penny whale, and now they're worth $1 billion because of the deal on the SK Creek Mine. The same thing could happen to Gold Terra. Our target a few million ounces. And we know the ground, we understand the target, and it's just ready to drill. We just have to be drilling as much as we can in 2022 and update our resource by the end of the year. This slide that you have in the background shows the red con mine, or the red block that we just optioned from Newmont to gain 100% along the Campbell shear, just south of the giant mine. This red block was basically next to it, the most important it's very small. When you think about it, we're barely gaining like maybe 3% more land position, but a key land position south of the con mine, or including the con mine itself, which together with the giant mine produced 14 million ounces along the best plumbing system for gold in the Yellowknife camp, which is the Campbell shear. We have other targets. We have plenty of targets. There's no question. But which one can generate the most value for our shareholders upfront very quickly? And that's basically the con mine. And that's what we worked for 2 years to get. It's a very simple target. It's produced 5 million ounces over a strike length of 2 kilometers. You can see a surface expression of it now. And you can see that we're exploring 100% of the 3 kilometers to the south. Plus, we also have more gold left on the mine itself. If we ever want to use the infrastructure again, if we think it's economic to do that, and we want to do it, there's still gold also left on the con mine itself that could add to what we're trying to achieve south of it. And at the same time, you can see that the potential illustrated by some drilling in 1961 by Cumming Co., 10 kilometers south of the mine, intersected 8 grams over 8 meters. The Campbell shear potential is tremendous, and we're just starting to unveil it, to explore it properly. There's been no exploration over the last 20 years along the Campbell shear. In that follow-up drill hole 1961, no drilling in 60 years. So we know that the potential to find more gold is there. To illustrate that, here's a snapshot of a long section looking west. When you're looking at this, you're looking from the north to the south on your left. You're looking at the footprint, the template of 5 million ounces of gold mine. Of course, there's green stuff, but of course, there's red stuff. But when you look at the green and the red, maybe the red is about 25% of the volume. But that's the high-grade part, 20 grams, 25 grams per ton, 5 meters width, 10 meters width, multiple zone. When you look at the pink, you're looking at a GT, grand time thickness, of 100, which translate into 20 over 5, 10 over 10, 15 over 6, 15 over 7. Those are the kind of number that we're looking for and that we have intersected. We've released a press release. We've released yesterday news on one of our drill on the Yellowknife deposit. Yellowknife deposit was discovered years ago, but a lack of wanted to do more, a lack of drilling it more, a lack of going back to see it, has basically put Yellowknife into the dormant stage. We revived it in 2021. Our first 2 holes, 3 and 5, got good mineralization. And of course, in the second part of the year, we drill another 13 hole on the Yellowknife deposit, testing the edge, testing the limits, testing the core. And I'm going to talk a bit about this, but what is very important about the initial deal and the new deal with Newmont is that now we have a huge area, as big or even bigger than the area where 5 million ounces was mined, which means that the potential to find a lot more gold, close to, for example, hole Y88, 14 grams over 5 meters, needs to be followed up. Now we have this potential. The company is planning to drill from surface down to about 1,300 meters vertical, and even deeper eventually, all the potential of this Campbell shear south of the con mine. And trust me, there is a great chance we're going to have success all year long. And when you look at the Campbell shear itself and the long section, basically that shows the drilling done in 2021, including hole 2022, which we're going to look on a section in next, you can see the potential. When you look very briefly, very basically, how many ton per vertical meters do we get? The zone is about 200 meters of strike length. It's up to about 10 meters in width, sometimes 15, sometimes 5. So say an average of 10. Sometimes it's 2 zones. We know there's about 6,000 ton per vertical meters at 10 gram for about 2,000 ton per vertical meters. You do 300 meters, you're already like 600,000 ounces. So you're getting roughly 100,000 ounces, or 200,000 ounces, I should say, every 100 meters vertical. So we just have to keep drilling the zone at depth, and then we end up with a deposit that could be 6, 7, 800,000 ounces. And our target is to expand the Yellowknife and add with new zones such as Old YD8 and other area south of the Con Mine. So our target is very simple. The shear zone is very easy to drill. You basically just have to drill and hope for good result. Sometimes we have results that are 3 grams over 10 meters. For us, it's still a success. In the eyes of the investor, you might be disappointed. At the end of the day, this is great news because 10 grams is worth $600 a ton, US. We can do mining in Canada for about 200. So basically anything above 5, 6 grams is good, but we're aiming for 10. And the potential to find more is definitely open at depth, open along strike between the Yellowknife zone and the Con Mine for additional zone that will build up our target of 2 million ounces of gold at 10 grams for 2022. For that, we're going to be aggressive. There's no question. We already have done a 2021 program of almost 13,000 meters in 26 holes. We want to do more this year, 3-4 times more than that. And our plan is to drill from January all the way to the end of the year. We're going to be upgrading a road to give us access 12 months a year to our drill site along the Campbell shear south of the Con Mine. And if we're successful by the end of this year, by the end of 2022, with 2 million ounces target at 10 gram plus, is to initiate pre-feasibility study with all the technical engineering work needed to demonstrate the viability of this project to be put in production. We've already done the back of the envelope. We know that 1 million ounces plus in reserve will be very good for an 8 to 12 years mine life at 100 to 150,000 ounces a year. We already have a deposit near surface. So we know, for example, we could access it via a ramp. And so there's a lot of things that will come. But the first step, get 2 million ounces, which is our target, be aggressive on drilling, and you're going to have a lot of good result over the coming years to come. And eventually, probably by the end of 2023, we could have a decision to go in production. That's the timeline. And believe me, our management team and our board that has been working with me for some instance, like Louis Dion for 27 years, we know exactly what we need to get an economic deposit back into production. Being in town, being in Yellowknife is great. But there's more. There's more to that. At the same time that we have maybe 2 million ounces on the Campbell shear south of the Con Mine, we also have some resource 20 kilometers north of town. The Crestarum deposit, for example, which we drill on 25 meters center prior to my venue to the company, has already outlined 300,000 ounces at 6 gram open pitable. So there is a great potential to add custom milling to a bigger mill to produce north of 125,000 ounces a year, maybe 200,000 ounces a year. So we do have a great potential in front of us. But the first step, again, 2 million ounces in 2022, that will be very helpful. With this is our 42-101. We did an update resource in 2021. We're going to do another one at the end of 2022. And stay tuned for all those good drill results. And at the same time, I would like to talk a little bit about our engagement program with community and indigenous. It's been managed and championed by Joe Campbell for a number of years. Joe started to be involved in Yellowknife in 2013. He's the founder, former CEO of the company. And with all the work that he's done through the years, which were taken over by David over the last 3 years, we know that we have a good name in Yellowknife, a good reputation. We respect the environment, we respect the communities, and we're going to carry on with the same engagement on the environment, on the community, and all the stakeholders involved in Yellowknife. And for that, we know this is important to listen to the people locally about what's best for the community and what's best for the investment community. With this, I will terminate my presentation and give the floor to any of you who may have some questions for David or myself. Thank you.
Thank you, Gerald. I do see some audience questions. One of the audience questions, with so many valuable pieces to the puzzle now put together, why do you think the stock is still so undervalued? When will people on the street care more about Gold Terra?
It's always a good question. It's like, how do you value a company is by the drill bit, by putting a resource together. So far, we're currently valued at $30 an ounce for 1.2 million ounces of gold on two small deposits, mainly north of town. But when the next resource comes up and we're providing 2 million ounces of gold at 10 grams in town, and this holds very well, like Yellowknife deposit is holding itself very well. The valuation of the company should have a re-rating. So what's on the table is for you to appreciate what we're doing and the market to recognize it. And sometimes the market takes more time to recognize it than it deserves. At the same time, I prefer to be undervalued today than overvalued. So in my mind, it's an opportunity for investor that, like myself, I own almost 5.5 million shares of the company. I don't have any stock option. I don't want any stock option. I want to be aligned with investors. And I'm not shy of my investment. I know that we're going to do very well with it. Just to give you an example, the value of hole 22. So it's very simple. You can calculate and using a 25 meters radius around the hole for a measured indicated resource. And what does 22 brought to the company? It's almost 30,000 ounces of gold. Multiply that by the profitability of, say, $600 an ounce, you're looking at a nice hole that can bring profitability. The grade is there. You have to realize that this is an older story with low-grade deposit. With the cornerstone and the game-changer Con Mine purchase option, we will create better value. We have a brownfield project. We have infrastructures. We have also a shaft that is already there down to 1,900 meters elevation. We have a lot that the company could benefit. As long as we get 2 million ounces, it will be a story in the recon after we reach this.
Questions about your upcoming drill plan. Will all the drilling you plan for 2022 be on the Yellowknife?
The 40,000 meters is all planned on the Con Mine or the Yellowknife deposit and so along the Campbell shear.
Okay, and how much money
we're also planning to do a small program north of town on some of the target that we want to increase the resource, such as Samoto and Mispico. But that's a very small program. It represents less than 10% of our budget for 2022. The prime target, or 95% of our budget, is going towards the Campbell shear.
Okay. And can you talk a little bit about your cash position and how much money you need to achieve the 40,000 meters?
We have a cash position just below $3 million, mainly all hard cash. Our flow-through money was all spent in 2021. And we will be tapping in the market at some point when we feel it's the right time. Roughly, you can calculate, but we don't have to raise all the money for 40,000 meters tomorrow morning. We can do it in 2 stages, for example. So what we need roughly is probably raise about $5 million. And I'm very sensitive to price and dilution. I am a shareholder like you might be. And the important thing in this is to make sure that we always raise money with the sake of diluting the less. Flow-through is one of those ways that I've never been a big fan of flow-through, but it does give you a premium. It does allow you to do more work. It's about the back end. So when we do flow-through, all the flow-through is accounted with the back end in good hands. And that's always the difficulty about putting a deal together. Last year, I'm going to give you an example. We raised just north of $3 million of flow-through, but there was one back end, one shareholders, and he still owned all of his share because he did not purchase them for the tax benefit. He purchased them for the belief in the Campbell shear. And that's what's important.
Okay. I have another follow-up question on cash. Bear with me, Gerald. It's a long one. Thank you for your team and the confidence and life you've brought back into Gold Terra. Can you kindly validate the company's cash burn rate per month and what's left in reserve? And then I guess you've already dealt with the funding issue. I think you have a fabulous story and great team. Lastly, if you're so confident in the gold reserve potential, why not bite the bullet once, get a massive cash advance and launch an incredibly aggressive drill program to get the market excited?
Well, as long as I can raise the money in the financial market, I'm not going to go sell off the property for nothing. And so I'm not a big fan of streams, royalty, and things like this. I prefer to keep the benefit of our project for our company. And when you look at our cash position and the support from Newmont and other very good institutions, we have a good cash position of about $2.6 million. Finished the year with that. We planning to raise the money. Like I said, we may raise it in one stage or two stage. Outside of our drilling program, which we brought at $200 a meter roughly on average, we have a burn rate of less than $100,000 a month, so roughly $1 million a year for all the admin. We don't have a head office in Vancouver anymore. Restructure, reorganize the company over the last 2 years to cut back on whatever that was not necessary because we want the money to go in the ground. And that's the main factor. We don't do warrants, so we don't put any ceiling on the stock. Maybe we raise less money. Maybe we raise it twice in 2022 or 3 times. It's all about price sensitivity. If we don't have the price we want, we'll raise less, like we did last year. We raised just enough money to do under 15,000 meters of drilling, $3 million. And that's what we did. So we're going to carry on with the same philosophy. And yes, I'd love to be able to do, but I'm not the guy who's going to say, I'm going to do 1 million meters. I'm not going to do 300,000 meters of drilling. Most of these drill holes are deep, like 1,000 meters vertical. And a shorter drill will be doing a lot of the infill drilling on Yellowknife and others. So I think we have a good plan. We're planning 40. Maybe it's going to be more. But definitely our goal is to be more aggressive with the money we have in hand.
Have you determined how many of those deep holes you're planning on doing?
Yes, we have already planned spacing of 200 meters, starting at roughly 800 meters vertical from the hole YD8, which is 14 gram over 6 meters, all the way underneath Yellowknife on a 200 meters spacing. Do a first fence at roughly 800, 900 meters vertical. And then from that first fence, we're going to move down, depending on the success, because there is a definite, and you can see it on the long section, there's always a definite pattern that you can see in the plunge of the deposit and the vertical, subvertical rake of the deposit itself. And you can see it also on Yellowknife itself. You can see a definite, very steep plunge to the south. We sometimes we're just on the fringe of the deposit. We get 3 grams over 10 meters, but we're not out of it. We're in it. We just need to do a hole next to it. And our first pass, for example, Yellowknife is to be drilled off on 50 meter spacing through the year of 2022. And then explore for additional zone between Yellowknife and the Coal Mine, near surface and at depth.
Okay. You mentioned that you don't do warrants. You also don't do a ton of options. And I believe that you've bought quite a bit of stock in the market yourself, Gerald. Can you talk a little bit about your position in the company and whether any other executives have been buying recently?
I am fortunate enough to be able to buy in the market or in financing. I participate in every financing. I actually joined the company in November 2019 and bought 1 million share at 36 cents. And you see, so I'm not in the money. And it didn't bother me because one of the things that I wanted to be able to talk to is be aligned with you guys, investors. When you invest into Gold Terra, I invest like you. And my investment is probably more educated than yours because I love the story. I'm kind of biased because I know I can find 2-3 million ounces. But remember what I did at Detour and remember what I could have done at Newcastle. There's no difference. Yellowknife is a project to create value with a specific target, well-defined, that just need to be drilled. So my position is under 3%, 5.5 million share, all purchased through different financing from the day one. And I will continue to buy. I am involved in this company more than anybody else, but I believe in it.
You touched on some of your ESG initiatives and community relations. Do you have any sense as to whether or not restarting operations on the Con Mine would be approved, given the site is just now finishing the reclamation process?
It's a good question. The Con Mine is 98% reclaimed. The beauty about taking on the liability will be just to monitor the site for water quality. Already, if I listen to people, they usually don't necessarily like to have a mine in their backyard. One of the creativity of having other deposit north of town may lean us into the feasibility study to put the mill near Crestarum, for example, or halfway between Crestarum and Samoto, and then truck 1,000 tons per day to Crestarum, which means that the mine will be out of town, but so close to town. And this could be a very good positive advantage for the town to be able to see that. So the only thing that will be in operation on the mine side might be putting back the Robertson shaft, which is 1,900 meters vertical. And there's a lot of things that could happen with it. At the end of the day, it's probably better to truck 1,000 tons from the Con to Crestarum than bring 5,000 tons per day from Crestarum down to the town, even if there's a bypass. But that's what we call feasibility study work. Optionality, asking people, everybody, the stakeholder. At the end of the day, you can have the best page on ESG in the world. At the end of the day, the work needs to be done on the ground with the people. We're too early now. But by the end of 2022, if we have a project and we have 2 million ounces, before we get the purchase option agreement done with Newmont, there's plenty of time to set up an already in place ESG, environmental and social engagement, that is already existing as an exploration company. But when you become a development company and you want to build a mine, that's a different set. The discussions are different because the impact is different from exploration to development. And trust me, I was involved in 3 mines in my career, the largest one being Detour Lake. So I know exactly what is all at stake. And it's all about listening and being aware of the community needs, all the stakeholders.
And I had an audience question just asking how far the Robertson shaft is from the Con Mine or from your target area.
About 2 kilometers north of the Con Mine. You can see on the slide, if you can see the slide on your screen, the Robertson shaft is the deep shaft that is sitting right in the middle. So you're approximately 2 to 3 kilometers south of it. I don't think you want to be using the shaft for everything, but it could be a good way to pull all the ore out at depth. This is the closest shaft to where we're working. It's also a recent shaft. It was sunk in 1971. It's got capacity for 2,000 tons per day. And the only thing we would need to do is dewater it. It was a very well done shaft. There's a lot of good maintenance, good infrastructure. It's a steel and concrete shaft. So it's probably still in very good condition. There's no wood, basically. That's the main answer. And so it could be used again, but we don't know if, for example, this is part of the feasibility study. We don't know if Yellowknife becomes a 1 million ounces deposit, we're probably going to start on Yellowknife by ramping down, right? To access the ore, develop the ore. And maybe we're going to extend a drift, which is on 3,000 feet level, that can be reached from the Robertson shaft or the C1 shaft and pull the ore from there. Because the ramp is very useful to bring big equipment. If you remember the Sudbury issue last summer when they tried to bring some scoop tram down the shaft and they basically lost the shaft for a number of weeks. So ramps are always very useful for large equipment and bringing people up and down, and it gives you an exit. The shaft can be used to pull the ore. There's a lot of possibility. I mean, the value of the purchase option of the con mine is tremendous. We cannot talk about it in terms of number, but a shaft which is 1,900 meters deep would cost today $70 million and take you 2 years to do it. We don't need to do that. It's already there. A lot of value in this con purchase acquisition. But as I said before, 2 million ounces at 10 gram will make it happen.
Okay. And despite the issues that you mentioned, you don't foresee problems with operating underground and hauling off through that shaft?
No, not at all. The shaft was in great condition when it was shut down in 2003. They basically let it flood. And because I said it's a structural steel and concrete shaft with some very good infrastructure, it should be no problem to, and I've talked actually to the guy who was doing some of the maintenance, Mr. I think William Barney, and he confirmed with me all of these things. There would be no problem going back in the Robertson shaft if need to be.
Okay. And a question just about how you're selecting targets on the shear. Can you explain a bit more about the method for planning to drill a shear? Is your likelihood of hitting high grade mostly random? In other words, how do you determine where to drill on the shear?
I'm going to use quickly 2 slides. So the shear is 70 kilometers long, has a width of 100 meters roughly. It dips to the west. So we're drilling it from west to east. So you can see on the section that you have in front of you, the drilling that was done in 2021 to intersect the shear. So you can see that hole 3 and hole 5, which is not on this section, were drilled and intersected the shear. And we drilled 14, which was also a very good hole, with 11 grams over 5 meters, within a zone of 5 grams over 17 meters, almost 18 meters, which in normal time, you will be mining that. So you can see that the shear is not always 10 meters. It could be 5 meters, could be 7 meters. So when you're going to be drilling it to blast it, and you're not going to do that on big distance, you're going to have sub-levels. And in this case, I would probably try to use long hole. The more we're going to be drilling, the more high grade we're going to be intersecting. When we have 4 grams over 10 meters or 3 grams over 8 meters, what's missing is the quartz veining. When we have 20 grams over 6 meters, we're in an area which is a bit narrower, so more concentrated, and the quartz veining is right there. And that's what gives us the high grade. So this is very typical or very similar to all the level plan we compile on the con mine. You go from 5 grams to 10 meters to 27 grams over 4 meters in less than 20 meters. But when you mine the whole stope, you get positive reconciliation and you're not missing any ounces. Now, you were talking about also how we drill this. You can see the drill pattern we're doing in 2021. You can see all the drill holes we've been able to do. Some of them were weaker, right? But did they intersect the shear every time? Yes. Did they intersect very high grade mineralization every time? No. But it is typical of shear zone in Archean geology to have a good success ratio. Some places, 1 hole out of 5 is good enough. Some places, 2 holes out of 5. It's all about the drilling pattern you do, the tightness, and proving it up.
Okay, thank you. And then, sorry to backtrack, but the question I'd asked about the shaft and going underground, I guess that was a permitting question. Let me just pull it up again. It's nice to have this kind of engagement, but it makes me work. I even had to put on my glasses. The question was, would you not foresee problems with operating underground and hauling off? I guess that was a permitting question, not a logistics question. So my apologies.
First of all, it's already a brownfield project. The current permit is reclamation. It's not operation because the mine is under a reclamation permit. So they're shutting down the mine, which is done at 98, 99%. What we call the property or the surface lease, where we have the surface right, a brownfield project. All the shafts are located on the surface lease. The deposit is more than the surface lease. So what's important when you have infrastructure and you're re-permitting a brownfield project, there will be no issue. If I was trying to put the mill back on the surface lease. That would be tougher to permit, maybe more than put it north of town. That I cannot answer that question. But for accessing the underground with the current shaft, it would be none of a problem at all.
Okay, great. And do you think you'll be able to potentially move into development more quickly than you did with Detour Gold? And if so, why?
Well, you're asking me to beat the record. Detour IPO was January 07. The first gold pour was February 2013, of which I still have 5 kilos, by the way. So this was done in 6 years, including a 26-month construction profile, plus starting the mine. And I did Tulawaka in 4 years, from acquisition to gold production, from 2000 to 2005. Every project is different, from a development perspective, from an operational perspective. If I go and want to develop the Yellowknife deposit because there's 600,000 ounces on Yellowknife, and that's where we want to start, we just need to permit a ramp and where we're going to put the mill. But there's still a process of permitting, environmental impact assessment. The moment we have the chances of 2 million ounces in 2022, we will be starting our baseline studies. When we talk about baseline study, there's been a lot before, but we're going to be more aggressive collecting data about what we want to do to defend our project for the environmental impact assessment that eventually will be deposited. But at the end of the day, we don't control permitting, but we know the law in Canada. We're not going to be losing the project because the government doesn't like us, like in different part of the world. You know, there's nothing hiding under the blanket. We know what we're dealing with. It's a process. And the better prepared you are, the faster you go through into production. Detour Lake went into production in 6 years from acquisition at the IPO level because we sit down with Goldcorp and purchase the surface lease from them. So we didn't have to re-permit the project from scratch. And that was the advantage of Detour, no question. The same thing here with the Con Mine. We would have access to a brownfield surface lease, closed mine, but it's called an industrial site now because there was an operation there before. So I feel very comfortable that we will not be bogged down for re-permitting a project and putting it back in production in Yellowknife, a mining town that basically needs continued investment to survive.
And you consider Yellowknife and Northwest Territory generally still favorable to mining?
Very much. Yellowknife is the gateway of all the diamond mines in Northwest Territory. During a period of about 3 months, from December to April 15, all of the supplies is coming through Yellowknife, shipped by ice road all the way to the diamond mines. So Yellowknife has an history of mining, has a lot of miners still working in the diamond mines, and definitely has all the legacy understanding and support to open mining again.
Yeah, and is Joe Campbell still fully committed to Gold Terra? He seems to have another project going on in BC.
Look, I don't question Joe on his whereabouts. I can tell you that he's 100% committed to Gold Terra. And maybe he's helping some friends in BC. That's possible. And what I can tell you is he doesn't sit on any other board. He's not a director of any other company. And he's a fully committed chief operating officer for the company who brings almost 10 years of experience in Yellowknife. And we have an amazing relationship. Joe is very happy with the deal with Newmont because he tried himself years ago. And I was able to pull it off. So he is very recognition and very happy that we're drilling and targeting the Campbell shear.
Okay, great. And then the remainder of the questions I have are more corporate strategy, capital markets. So, Gerald, to raise market awareness and excitement for Gold Terra, any thoughts on a more aggressive marketing push to attract new money into the stock?
I think that from my experience, I'm a geologist involved in gold over more than 40 years. And I can talk about my 12 years at Barrick when gold price went down to $250 an ounce. As you know, if you're a seasonal market investor, money goes around. And one of the biggest challenge was in 2021 is there was no money in the gold business. There was no money for the junior. And as much as you can do marketing, I'm always available to do webinar, to take calls, to answer emails, to do marketing. And then you have COVID. And you know very well, some people don't invest without meeting you in person. So we've been going through a challenging 2 years, but we've made some very good progress. And if with the money that we're going to be raising and the aggressivity of the drilling we're going to be doing in 2022, once we get that 2 million ounces, it's not going to be as cheap as today to buy the stock.
Okay, and I had a question just about your shareholder base, institutional interest, and any corporate interest that you're able to discuss with us.
The list is on the presentation. Some of our institutions are very solid resource, not fly-by-night. McKinsey Financial, SSI, US Global, RBC Asset Management, some Keynesian fund. There are other people, I think, also from different area, maybe with smaller position in the order. Whatever it's in Gulls, whatever it's different. You never have, I raised $2.6 billion at Detour. And it's not somebody else who did that. I did it myself. Of course, with the bankers, with the investment community, and with the support of the institution. That was a big miss at the beginning. There was no institutional support in the story. That's what David and I have focused on over the last couple of years. And we've been successful. And it's a work in progress. And we keep knocking on the doors. But some investor will listen to the story 5-6 times. And they know exactly when they want to come in. What you can see when you look at the potential investment is Gold Terra is worth 40 million US, $50 million Canadian market cap. They have 1.2 million ounces. So add 2 million ounces at 10 gram in a current $1,800 US environment for gold. You're not going to have a valuation of $30 an ounce because you're getting more concrete, you're getting more solid. Every time we had a resource out at Detour, we had a review of our valuation. And when we reached 15 million ounces in reserve, we had a different valuation. And when the gold price went down, it was a different valuation again. The beauty about Yellowknife, the Carmine and the Campbell shear is that 10 gram gold is worth $600 US a ton. If your operational cost is about $200 US, even 300, if you want to put it the worst case scenario, you're still having 100% benefit on your operational cost. And that's, to me, that's the answer. That's why I don't want to do another low-grade deposit. That's why my focus is on a high-grade deposit, because a high grade will allow you to go into different gold price situation. You're going to avoid the volatility of the gold price because you have a solid project. In my mind, if the investors are there, they will invest. But if they're not there because they're on something else, they're going to turn around and one day going to come back. The beauty about believing in gold, believing as hard asset as gold, is that you believe in something that is solid for the future, nothing that is in the air.
If you were to assess Gold Terra from a retail investor's point of view, what would you define as the biggest risk? And I don't think we have to limit it to just a retail point of view. What do you think the biggest risk with the project right now is? Other than losing Dave Suda.
I don't think that it's a hard question. I mean, everybody invests with the tolerance for risk, and everybody has a different risk tolerance. I'm an old school person. I turned 64. I got energy like if I was 44. I still ski like I am 30 years old. I believe in gold and I trust gold in Canada. I spent 12 years at Barrick traveling the world. And my interest is to work in Canada or in the US because it's safer. And I'm very happy to be able to do it in Canada still. I speak the language, I know the law. So when you look at company and project, these are the risks you have to look at. My choice for Gold Terra to be in Canada is avoiding risk of international exploration. But other people are completely comfortable with that. And I'm fine with that. It's their choice. I travel the world. I don't want to do it again. And I know the risk of being elsewhere. So I'm very happy, even if it's more expensive and more difficult to mine gold in Canada, or a bit more difficult to permit because you cannot brag anybody. It's okay. The risk is very simple. Is there gold or not? And I tell you, there's gold. I said that in 2006 at Detour. There's more than 5 million ounces, and we end up with more than 20. So when the risk comes from, is it a good project? Is it well managed? Is the board good or not?
Got it.
David, you want to say something?
Yeah,
David has his hands up.
Like I did. I've never done that before on one of these.
I thought he was high-fiving me.
Yeah. No, I just wanted to add to that. I think that we've been living the risk. The biggest risk is the market for investment into these projects, and that's a risk that goes with the cycle, and funding these projects is not easy in tough parts of the cycle, and I think we've sort of lived through, and we it feels like we're coming out of the risk of being in a cycle that's tough on these investments. So you can have one of the best projects in the world, you can have one of the best management teams, you can have one of the best boards, and you're still subject to that risk. So I think it speaks to the quality of this asset, to the history that has brought the asset to the point that we're at now, to the team that even though we've been living with that risk, we've got a great project. We've managed to keep it funded and to move it on to this exciting trajectory. So if we can get out of the shadow of that risk into the light of a better market and a strong gold price, et cetera, I think that the future is really bright here. So that's all I wanted to add by raising my hand.
If I don't get the Newmont deal done, there's a big risk, because the second deal we did with Newmont opened up the gate of the Campbell shear for 3 kilometers, 100% of it. And that's the game changer. That I don't get this, and that's a bad news. So that was a risk. But I said 2 years ago that we need the con mine, and we got it. So if there was a risk 2 years ago, it was not getting the Campbell shear and the con mine. And we got it. But it took 2 years. Now it's time to drill.
Well, I see a couple other questions, but we are coming up on the hour. So I think the one thing that I would like to revisit is your catalyst slide. And maybe you can give us some of the upcoming, or remind us of some of the upcoming catalysts, things that investors can look for, and when you expect the remaining 4 drill holes to come out.
So the hole we released this week was completed in late September. So just to give you an example, we had to wait 3 months. So one of the challenge of our industry now is the lag time on assays to get them. The last 4 holes should be obtained within the next month or so. We finished the last drill hole on December 18. Hopefully, by the end of February, we'll have the result of the last one. We are moving in with the rigs as we speak, mainly the first one and the second one towards the end of January. We're planning to yes, if you ask me, are you going to raise money over the next couple of months? I would say yes, we will, because with 2.6 million, we can go as far as we can, but not enough. Having a plan of 40,000 meters means that we need to raise about roughly maybe 8 million at the max, maybe 10. And that will give us a lot of freedom to drill pretty much all of 2022. And the big catalyst, when you talk about catalysts, the big one is a resource update. Of course, drill result all the way through 2022. And of course, an update resources at the end of 2022. And if I firmly believe that if we're not at 2, we'll be close. But we already have achieved what we wanted to do, which is be above 1.5. You see, Newmont's agreement is 1.5 million ounces in all category. So it's not a very hard boundary. And my target is 2 million ounces of measured indicated, and we will get there. This is not a target that needs to be identified. It just needs to be drilled.
Perfect. Well, I think since we're coming up on the hour, we can end the session there. If anyone has any questions that weren't answered, or if they want any follow-up questions, please feel free to reach out. Is there anything in the session that we didn't cover, Gerald or Dave?
Well, for me, it's very simple. You have my email at the back end of the presentation, gpanneton@goldterracorporation.com. I'm always available and answering email. It is my pleasure to be there for you guys if you have any question mark.
Okay, great. And I think I can speak for all the investors on the call that have been messaging. Dave, thank you so much for your contribution to the company, for bringing Gerald in, and I wish you the best of luck and glad you're staying on. Great update, great results this week. Looking forward to those other holes, and good luck in the future. Really appreciate your time, and thank you to everyone who participated. Have a great afternoon.
Thank you all.
Thanks, everyone.
You can never own enough.
That's my favorite of all the Gerald sayings. Have a good afternoon, guys.